Hi everybody, I'm Anthony Sewell, Managing Director of the Property Investment Store. Today I wanted to talk to you a bit about our recent released ebook, How to Cure Your Financial Cancer. Unfortunately, most Australians have a mortgage on their home loan, and we don't refer to it as a mortgage, we refer to that as financial cancer. And today I'll explain a little bit why. But one thing I wanted to show you today with the whiteboard was just how the numbers work and just how we believe that using an investment property, we can show you how you can get out of debt for nothing out of your pocket. So let me go through some numbers for you and show you. So I want to use a Sydney example because that's probably the majority of people out there that are in probably the most financial cancer pain. So for example, most houses in Sydney, let's just go with a house value, $1.5 million. And let's say for this example, this client here has a debt on their home for about $900,000, okay? Sad fact is, one of the very sad statistics that we see and have seen for the last 27 years I've been doing this, is that most 55-year-old people who are in this position still owe about a third of the value of their home when they are at 55 years of age. And that's a scary statistic. I mean, that means that if this person is at 55 right now, a $1.5 million home, they still owe about $500,000 on that home. And that's a lot of money to be owing at 55 when you want to retire very soon. So the whole idea about what we want to show you today is how you can use an investment property to actually pay that debt off over a certain period of time for nothing out of your pocket. So let's say we go and buy a property up here, an investment property, for $800,000. We're not too worried about the purchase price. I'm just using an example here, but the key thing in this is that no matter what you buy and what purchase price we look at, we want to be buying in an area that's going to get us an average, we believe, $300,000 in equity growth over the next 5 years. But in the meantime, what we also want to do is find a location that's going to give us really good cash flow for that property. The idea over that 5 years that it costs us nothing to run that property, so that we know most people in Australia right now with more increased mortgage rates are suffering on their $900,000 mortgages. So we want to put them in a position where if they own an investment property, it's really not impacting their life or hurting their life while we do this process that we believe can help their mortgage. So let's say over the next 5 years' time, that property, $800,000, we're going to go and buy that today, but I'm going to use, to set that up, we're going to use 20% equity over here from the house plus cost, and we're going to go and get a loan over here for 80% of the value of the property. So in this case, that loan would be $640,000. So we're not too worried about the loan amounts and all that sort of stuff. That just gives you an idea of the structure. But the main thing here is we want to see this property grow by $300,000 over the next 5 years. So if that property now in 5 years' time is worth $1.1 million, then we've made the $300,000 we need. In 3 years' time, 5 years' time, we want to take that $300,000 and we want to bring that across here and we want to pay that off the home loan over here. Let's just ignore capital gains tax for the time being. We know that exists, unfortunately, and we can go through that. But let's just use the rough numbers to show you how it works. So once we've paid that off in 5 years' time down to 600, that's going to normally enable us to actually go back to the bank and now re-borrow more money to go and buy another 2 properties over here. So this time we're going to work with 2 properties for the next 5 years. And the theory is going to be, once again, that if we get $300,000 on each of these properties over the next 5 years, we would have made $600,000 now, which means we're in a position now to pay that debt off. So not only can we be in a position to make the 300 there, the 600 in the 5 years, but the main thing in this is that you've made all that money, and because we've chosen properties in certain areas that have certain income coming in from them, we can design this strategy so that it costs you nothing out of your pocket to be able to do this. So if you've got a mortgage and you want to know how to get out of debt and get out of debt for nothing out of your pocket, then we can show you how.